Trading is a very difficult place to make money, and so few people can do it. I'm going to show you the top 5 mistakes that traders make that prohibit them from making consistent gains. Number 1, they don't have a base education. Now come over to my screen right here and look at this. People look at this and just say, you know what? All I see is price movement. All I see is candles going up and candles going down. And that's all I need to know. When the stock price goes up, I'm going to buy it and I'm going to make a lot of money. And when the stock price goes down, I'm going to short it and I'm going to make a lot of money. There's a lot more to it than that. They don't understand where trends go on the daily chart. They don't understand volume. Volume is so important. I've said it in multiple videos and live streams. It's the gasoline that goes in your car. If you don't have gas, you're not going to go anywhere. They don't understand the resistance and support levels that are created not only from major moving averages, but big swings up and down. And this is Apple right now. Look at this big base level of support that Apple is stuck at. If I'm an experienced trader, I look at this and understand this would be a very tough place to short because this has created such a big level of support that I'm having a hard time breaking through, even though I'm not next to any major moving averages. Not having these basic fundamentals for a system is going to prohibit you from making money in not only the short term, but the long term. You're never going to be able to do this long term if you don't have a foundation level, something to build off of, just like anything else in life. Number 2, the number 2 reason people are not making money, they strategy hop. In the world of trading, there are so many different people out there. There's people on YouTube, there's online courses, there's books, there's every piece. This is what trading is. People take a bunch of poop and they throw it at a wall and they see what sticks and they try to sell a course on it. Anybody can do that for a very short period of time. Not a lot of people can do this for 20 consistent years, let alone an entire career. I have friends that have been doing this for a very long time and they stick to one system. They stick to one process. Can you learn little things from here and there? Absolutely you can. But I've realized that new traders, they find a system that they like, they stick with it for 5 days, and the next day they go, well, I lost a little bit here, I'm going to go try to find something else. Or this system doesn't work, I'm consistently losing money. Problem is, they're doing something wrong in the system. I have a checklist that I go through, and it's just bullet points that say, make sure that all of these things are correct. My students that I've taught use that same checklist, and as long as everything right there is hitting on all cylinders, you're going to make money. What you're not going to make money doing is saying, okay, here's my 7 items on my checklist. I'm going to start pulling in things from this other video because that makes a lot of sense. The problem is if you don't have a basic understanding, you're pulling in something that's actually counterintuitive to something that's maybe on my checklist, and it's just not going to end well for you. Be very careful out there. It is the wild, wild west when it comes to trading. I personally think that trading, the word trading, has one of the single worst connotations in the English language. You hear trading from the pundits on television. You hear it on YouTube. These people aren't trading. They are just using the word trading as buying and selling stocks. They're not actually using a succinct system to make money consistently. So do not go out there and jump from system to system. Give something a chance. Let it go for a few months. See if it works. If it doesn't work after a few months, then you move on. Then you continue your search. Number 3, not tracking your trades. Come over to my chart again. If I am in a trade, and I'm just going to use Apple because it's on my screen for an example. And let's say that I end up buying Apple right here on an engulfing candlestick. Our trend is there, our volume is there, and we start to move up and we end up exiting up here. It's a win. You might look at this, and a lot of people do look at this and say, well, I won. I don't need to write that down. I don't need to go and review what happened during my trade. Well, I look at this trade and still now I'm in my 21st year of trading. I look at this and say, I had to fight this major moving average right here. I had to fight the 50-day and the 25-day moving average, which actually crossed each other during my trade. That's something that I need to go and review, and I need to learn from and say, why did it make it through that level? Well, it made it through that level just looking at this because the volume was there. So I'm going to write that down and say, if I see stocks going through the 25 and the 50-day moving average, I need to know that they need to have a lot of volume, more than average volume, to push through that level. It's something that you need to write down and review. Write down where you entered, where you exited, the percentage gain, and the reason that you made money. Now, when we look at the other spectrum of it, if you lose money, Let's say that you're in this thing. We're going to use the same trade just as an example because this is what I can see new traders doing. You're in this thing. This thing is running really nicely. You've made a heck of a gain here. You bought it at $183. It's gone to $195. You're so happy because that happened in 4 days. And you know what? You're not going to exit it here. You're going to let it run down and run down and run down, and you're losing a lot of your gains. But you said, I have so much money to play with here. Why did you not exit? Well, you didn't pay attention to the stochastic. The trend turned on you. Not only the trend, the volume turned on you. And maybe it's something you missed, and that's okay, but you need to write it down. I know losing trades can be frustrating and it can suck. And the last thing you want to do is go and analyze why you lost. But it's so important to go back and analyze why you lost on a trade. If you don't understand how you lost money, you're not going to be able to make money because you're not going to be able to fix that wrong. Write down your trades, write down where you entered, where you exited. Was it a long? Was it a short? What was the reason for your profit? What was the reason for your loss? And do not make the same mistake again. And that leads me into number 4. People don't know how to lose. Guys, money is one of the most emotional things in the world. It just is. We enjoy making money. We hate losing money. We hate spending money in some cases. Anytime money is coming in or going out, there's an emotion to it. And the tough part about trading is you don't really have a lot of control over what the market can do. You're not going to catch the whole piece of the pie. You're just going to get a little bit of the pie. And you need to understand your personal emotions. The type of trading system that you pick needs to resonate with the personality that you have. For me, I'm generally a pretty laid back person, and I'm generally a person that likes to keep it simple, stupid. I don't like complex things. If I can do something in 1 step versus 2 steps, I'm going to do it. If I can do something in 3 steps versus 5 steps, I'm going to take the 3 steps all day just because I don't like doing extra stuff and not being efficient. That's the trading system that I have. It's very simple. There's basically 15 patterns and indicators that I look at, and I can make a living off of it. And I've been able to condense it down and make it that simple. Because once you start bringing in other stuff and kind of polluting the waters, that's when your brain just goes like this, and you're not going to make money. And that's kind of going back to number 1, what we said, or number 2, bringing in too many systems into one. So for me, I learned that for my emotions, I need to keep it simple, and I need to understand that it's going to be a process. There are going to be losses. And when you lose, be able to understand why you lost. And when you win, understand why you won. Celebrate your wins. Don't get too high. Be upset about your losses. Don't get too low. But have that emotional control. There's way too many people that go out there that put way too much money in the beginning and make a ton of money off the bat. And they think this is the easiest thing in the world. Then they get absolutely decimated. Conversely, there's people that come in, put a bunch of money in, lose, and say trading doesn't work, trading sucks. Yes, if you go at it that way, in either scenario, it's not going to work well for you. Go into this slowly. Go into it with patience. Go into it with a method and intention, and you are going to do well. Don't be that person that doesn't understand their personal emotions and goes into this all wrong and starts losing right off the rip and says trading sucks. And now number 5, no risk management. Now come back to my chart here. When we're looking at something like Costco, risk management can mean a bunch of different things. It can mean understanding where you put stops in place, putting trailing stops in place, meaning that if the stock keeps climbing, your stop is going to trail behind the price. So let's say you put in a 5% stop. The most you can lose is 5% off the highest point that your stock price has hit while you're in that stock. Or if you just want to put in a 2% stop below whatever you bought it at, that's up to you. That is the risk management that you have to take or understand. The problem is people don't understand that. They'll just get into something and say, okay, I'm in it. There's no way that this can go down on me. Earnings are another place where risk management needs to be taken. I always say, do not trade earnings. This is Costco. And let's look at Costco, for example, here. Costco has been on an absolute tear since basically May of 2023. It just continues to go. Yes, there's some hiccups in there, but it continues to go. Recently, there's really no hiccups. So if we go here to January 4th, first trading day of the year, second trading day of the year, and it just continues to go up. And it got to almost $800 a share, 52-week highs, all-time highs, everything is going great. But you noticed here, they reported earnings. And they reported earnings on what day? They reported earnings on Thursday, March 7th of 2024, after hours, so after 4 p.m. For me, I would have never been in this thing. You're looking at this saying, this thing has just been going up like crazy. People love Costco. People are shopping at Costco. What happened to their earnings? They came in and reported earnings beating on the top line, and on the bottom line, they missed by $668 million. Okay, look at the revenue that they generated, $58.4 billion. Okay, so they barely missed. And what happened to the stock price? It fell 7.64% the following day, and then the next day another 1.5%. You need to understand that on earnings, you're not in a stock. Okay, now let's pretend that earnings weren't even there. You need to have a trailing stop here. Yes, this just keeps marching forward, but maybe you put your trailing stop down 5%. So if it hits $746 off the high, all of your shares sell. In the case that there's something going on where there's a big drop in stock price, this is just an example of people not managing their risk. And somebody will find this. They'll go up to $790 a share. It'll come all the way back down to 700. They'll lose because they bought right in here, and they say what? Trading sucks. It doesn't work. That's not true. You just didn't manage your risk. So if you like the tips in this video, watch the next video, join my live streams Tuesdays and Thursdays at 10 a.m., click the subscribe button, and I'll see you on the next one.